Welcome to Matters Financial and Geopolitical. I'm going to take a special focus on this tariff war that has intensified off the charts. Goldman Sachs, Nomura and JP Morgan are among those that have rewritten their forecasts as President Trump threatens to impose 25% tariffs on around $300 billion of additional Chinese imports. That's a definite. It's not even a 65 chance. They're underestimating it. Analysts at Nomura have made that hikes in duties, which mean practically all of China's exports to the US are hit by tariff hikes, their baseline forecast. That's my baseline forecast. They see it as a 65% probability before year end and most likely to come in the third quarter. The US-China relationship has moved further off track over the past 2 weeks after a period of what appeared on the surface to be steady progress towards reaching an admittedly narrow agreement. We do not think the two sides will be able to get back to where they seem to be in late April. And I completely agree with that analysis. And I kind of predicted it in October when I was writing about this collision. And I said the incident with the USS Decatur, where a Chinese warship came within 45 yards of that ship, is surely a precursor. And I also quoted an American professor who said the geopolitical contest will likely escalate dangerously. Powerful forces on both sides are driving the world's two strongest countries towards fully fledged confrontation. I agree with that as well. Steve Bannon says killing Huawei more important than trade deal with China. Driving Huawei out of the United States and Europe is 10 times more important than a trade deal with China, according to former White House chief strategist Bannon. That again confirms the intensification that we've seen unfold and catch the market, which had become complacent, off guard. 10th of December, I was writing about a truce dinner and the arrest of Huawei, which was the beginning of this saga, which has now reached this point. And I was also talking about how Africa is a very important market to Huawei. In fact, Huawei is in the bloodstream of Africa's telecom infrastructure, and how this plays out in Africa is now an above-the-radar issue. We learned that Britain's Vodafone, which holds 40% of Safaricom, suspended pre-orders of Huawei 5G handsets, and essentially we've got the situation with Huawei is a microcosm of what is currently happening, and I think that should be your proxy to understand the level of intensity and the level of disengagement that the Americans are now going to force on the Chinese. Now, that previously very complacent market has suddenly started to panic. I take you back to mirrors on the ceiling, the pink champagne on ice. And I said if volatility spikes, positions are going to be reduced en masse, or to put it another way, and to borrow the lyrics from the Eagles Hotel California, mirrors on the ceiling, the pink champagne on ice. And she said, we're all just prisoners here of our own device. Last thing I remember, I was running for the door. I had to find the passage back to the place I was before. Relax, said the night man, we are programmed to receive. You can check out any time you like, but you can never leave. And I said, what is clear is that we're at the fag end of this party. And I said, it took a long time to unwind, but unwind it will. 14th of May last year, I said, countries that have been flying by the seat of their pants are now being caught with their pants down. We're in an environment where the flight to quality takes the froth off the markets, and therefore the tide is going out. Let's start with Erdogan. Turkish lira, this chart is from EGM Securities, 6.15. My parenthesis is see you at 7. Turkish state lenders sold the dollar versus the lira at around 6.15, draining even more reserves, delaying the inevitable. We've seen this before. I saw it firsthand in Mexico, 1994. They did the same thing. They used money they didn't have to defend the peso, and then all of a sudden they run out of money and the peso collapsed. And that takes me back to Mrs. Thatcher. There is no way in which you can buck the market, she told the House of Commons many years ago. To that point, Tories expect Theresa May be gone within days. Her party is facing a wipeout in Thursday's poll. Some opinion surveys put the Conservatives in 5th place. Mrs. May is under huge pressure to resign or face a putsch by backbench Tory MPs. Mrs. May refused to meet Home Secretary Sajid Javid, Foreign Secretary Jeremy Hunt, and Scotland Secretary David Mundell on Wednesday, as she gathered her inner team for fraught discussions on whether she would fight on. She's not playing by the rules anymore. It is incredible how she just avoided the cabinet acting against her by not meeting them. Ian Duncan Smith, the sofa is up against the door. She's not leaving. I saw this from James Melville. It's basically no deal or remain now. All other compromise options are seen as some sort of betrayal. Once again, Brexit has become a binary choice. I said 2 days ago, the behavior of the pound, the spike higher and then the complete sell-off, is the real purest signal. And I'm sure she's heard that through all the noise. This is a sterling chart since Brexit. You can see how it collapsed, you can see that recovery, and then you can see we're collapsing again. Dollar index, we're off to the races now. Keep an eye on the dollar. It's all about the dollar. The deepening US-China trade war is hitting commodities. This is the contagion, the negative feedback loop from this tariff war. Even if supply disruptions keep oil still fairly strong. Copper below $6,000 a ton. Asian coal sharply down. So is Asian LNG. Glencore, the world's top commodities trader, is at its lowest share price in 2.5 years. Gold was last trading at $12.82, safe haven bid. Crude oil, look at this chart from Order Flow Trader, $60 trading. Emerging and frontier markets are shivering as they factor in the China emerging and frontier markets feedback loop phenomenon. If China sneezes, I wrote, a whole lot of countries are going to get a very serious bout of influenza. Interestingly, in our case, we're relatively immune to this phenomenon because China is not a big taker, avocado hopes aside, of our exports. I said to Al Jazeera, what we're watching across this continent is a kind of tipping point moment. And I think that comment's important because if we get a major negative feedback loop going on the continent, that's going to feed into this moment that we've seen in Khartoum, in Algiers, and it'll accelerate it. The Bank of Zambia, they're the most exposed of all African countries, raised the interest rate to 10.25 from 9.75. The kwacha has slipped 13% against the dollar this year. Small rebound, but it's not going to last either. If FX reserves down to 1.4 billion from 1.57 billion, they don't have the ammunition to protect the currency. External debt service costs up 90% this year will continue to drain the buffer. Gregory L.B. Smith, Renaissance Capital. This is the comment I agree with. Worry is this government does not act and tries to make it through 2021 elections. They can't possibly make it. Drought forces Zambia to start power cuts. The electricity shortage will deal another blow to the economy of Africa's second biggest copper producer. Vedanta and First Quantum Minerals use more than half of Zambia's electricity supply. And I wrote about Zambia in an interview with Ronak Gopaldas in April last year. I said a big ticket blow up, and I said Zambia is probably the likely candidate. I said in October last year, dominoes are set to fall. Dollar rand, look at this chart, 14.46. If the trade war intensifies, which I'm pretty certain it will, this thing is going over 15. Now, counterintuitively, best performing currency in the world, the Egyptian pound, up 6% year to date. I think it's still got further to go, because from an economic perspective, I think Al-Sisi made some bold moves and he's reaping a real dividend now. They devalued their currency early, took a brutal punch in the solar plexus, and are now reaping the dividend from its bolder economic policy. Leaving my notes aside, this reminds me of periods I've witnessed before. I described to you 1994, I was financing the Mexican dominoes for one of the banks in Mexico. I walked in the morning and the CEO of that bank said, I don't know how I'm going to pay my debts. And that was after the Mexican peso collapse, flight into the dollar. I know the dollar it's not a clear-cut thing, but this is a Pavlovian response the market has. So that's why I'm so bullish on the dollar. We saw it in 97, in 98. We've seen this script before. But this time round, we're coming at it at 4 in the morning, punch drunk, and we've got, I think, a very, very adversarial situation that has developed. And I continue to think that we're going to see further sell-offs in risk assets, and I think, it's just getting